Hi everyone, welcome to today's video. So approximately a year back, last May, I had done a video where I had shown a live investing of 50 lakh rupees. Back then, Nifty was at 16,400. As of today, within a year, it has moved to 18,400. So in a year, we made a gain of 12.5%. More importantly, we made that return on a very safe asset called as Nifty 50. And we made a return in a falling market. Why am I saying falling market and bad market? Take a look at this data. This shows the category wise returns of different mutual funds. So you can see that the average market performance this year has been really bad. And if in a sideways market you can make 12.5% returns, then it should give you confidence that retail investors can manage their own money, can make good returns on safe assets. So this is the spirit with which I'm shooting this video. I'm going to speak about 6-7 basic points today, where because now the markets has started to give a little bit of run up. So if you understand these 6-7 points, you will have a very good probability of making good returns. That is the simple agenda with which I'm shooting the video. I'm not a registered investment advisor. I'm not asking you to put your money in X stock or Y stock, whichever examples I'm going to give on this video. I'm just simply using it for educational purpose. This is not a push that buy stocks, not buy stocks. That is your call. Check with your investment advisor. Okay, so let's start. And here are the 6 key points that you need to know. So first key point that you need to understand is that we are already in a bull run. I've been making videos. I've been speaking about the fact that we are in a bull run. I've been giving a lot of commentary on the member community tab of YouTube. I have done everything possible to outline the fact that we are going to have a bull run. We are already in a bull run as of now. Now, why am I saying it? That bull run is there. Okay, so multiple ways I've already proven it to you. But now let me start showing you some FII, DII data. This is the type of knowledge that you will only gain from experience. So if you do like it, do hit the like button. That will help these type of videos reach out to more people. So let me show you this trend first and foremost. See, now let me show you data from November of 2007, and you can get this data on money control. So go on November 2007. What you will see is that FII are in red, right? So you go November, December, January 2008, and this is like from starting from which month? November of 2007, right? So this is a negative trend which lasted all the way. Ye ek do green nahi hai, so these 1-2 greens, just leave it. This is not like necessarily a trend change. This almost lasted till August of 2009, and after August of 2009, the trend somewhat changed because you see like these 4 big buying, and generally then buying happened. So if you look this up data and correlate it with Nifty 50, what you will find is something very interesting. So see, this was the down phase when FII started selling from 2007 and onwards, right? And it fell this entire range. Then it started going up from September of 2009, and look at the bull run that happened after that, right? So the market started going from September of 2009. This was 4,800 levels. And if you would have stayed put till the entire bull run lasted till all the way till 2016, you would have almost doubled your money. So which is like a very good return, so to say. Now something similar has happened even recently now. So now let me show you some recent data, and you can check all the data here. So if you check the data from April of 2021, why April of 2021? Because before that there was a mini bull run that had already happened in the market. I will show you on Nifty 50 chart also. So if you take a look at the data from this, you will see that, hey, this was a trend reversal. The trend changed from a bull run, all these green candles, to somewhat red candles, right? And you can see that this lasted all the way till now approximately. So February of 2023. So now let us start checking the data that what exactly happened here. So if you check that from April of 2021, so where are we? April of 2021, here we are. There was a mini bull run because it's not as if that immediately this will get reflected in Nifty 50. But after that, once the selling, it was uncovered that FIIs are selling quite aggressively. 3-4 mahine ho gaye. Trend has been built. Then the market moved sideways and it has not given any return for the last 1.5 years. Now what is happening is that according to me, a trend reversal is happening. So you can see that if you look at March data, both FIIs and DIIs are buying. If you look at April data, both FIIs and DIIs are buying. If you look at May data, which has not been published yet, FIIs and DIIs are buying, and they are buying in decent quantity. That is also the point. So there is a very clear trend reversal that is happening according to me. And according to me, we are already in a bull run. This gets reflected after a few months. That's part A. Part 2, if you check. So this was the story about FIIs. Now let's check the story about DIIs. DIIs or domestic institutions, HDFC, AMC, NAM India, all these big domestic investors. So they are sitting on record amount of cash. Now, what is the meaning of record amount of cash? So it simply means that they are, whatever SIPs you are doing, you are giving it to a mutual fund organization. They are keeping that cash and they are waiting for an opportunity to invest in the market. What will happen when they invest in the market? The markets are going to go up. Why? Because the number of sellers have increased in the market. So domestically also more incentive to invest because they are sitting on record amount of cash. Part B is FIIs are already returning. When both the parties start buying, you will see all these green things happening and the market is very given that it is in a bull run. So this is the first key aspect and perspective that you must develop. You must have a theory. It's not as if that you need to agree with me that we are in a bull run, we are not in a bull run. You form your own opinion. Do you think that we are in a bull run? Do you think that we are not in a bull run? Counter argument here could be that, you know what, recession is there. Germany is going through a recession. US banks are collapsing. Inflation problem is there. I've already done enough videos. Please get a concrete understanding, form your opinion. This is point one. And if you are bullish, if you feel that, hey, we are in a bull run, then what are you waiting for? You need to invest. You need to max out your positions as of now and ride through this entire bull run wave. That is where you are going to make a lot of money. Let me also represent that graphically and then I'll move on to point number 2. See, what is going to happen is fairly simple. If you believe that bull run is there, then it will move something like this. ऐसा नहीं कि crash नहीं होगा, crash will be there every once in a while, right? It might happen like this, it might go like this, but generally you are on an upward moving trajectory. So if you are buying majority of your stuff here, or if you have already purchased it here or here, and if you ride through this entire bull run, which might last for 2-3 years, or maybe 1 year, no one knows, then only you are going to make money as a retail investor. There are just literally 2 ways that you will make money as a retail investor. First option is that you buy cheap. For example, the initial graphic that I showed you that I had purchased Nifty 50 at 16,400 levels. According to me, that was cheap, right? That was inexpensive at that time. So I had done bulk investing there. That's option 1. कि आप सस्ता खरीद लो. Second option is that you ride through the bull. So that's it. That's how you're going to make money. Otherwise, you will have to do FNO. Sometimes you will make money. Sometimes you will lose crazy amount of money. And net, as per studies, it has been pointed out that FNO traders do not make much money. So I hope point 1 is clear. Let's move to point 2. Now, the second key point that you need to remember is that please stop panicking. There's deliberate panic that is created in the stock market on good stocks. Then they fall. Big investors buy them. And then retail investors sell them, and then the stock runs, and then they start thinking, yaar, khareed lena chahiye tha. So, okay, so let me illustrate that story by talking about the example of Page Industries. So after the Friday session, I'm shooting this video on Saturday. So on the Friday session, Page Industries stock fell by 15%, right? And now you will be thinking, yaar, कुछ गड़बड़ हो गई कंपनी में, and it has fallen to like 52 weeks low on poor Q4 show. So what exactly has happened with Page Industry and what is the meaning of poor Q4 show? So let me first and foremost take you to Page Industry fundamentals, so to say, and illustrate the point. See, if you take a look at year-wise sales, right, then it is sitting on highest ever sales. It is sitting on highest ever profits. So year-wise sales, if you aggregate it, no problem. But if you take a look at quarter-wise sales, right? So for example, March 2023 quarter, if you compare to March 2022 quarter, you will see that the revenues have shrunk by roughly 15-20%, and resultantly the profits have also shrunk quite a bit. Now, if you understand the point that as to why this is happening and what is the reason for that, then that 15% fall becomes a great opportunity for you to buy. Otherwise, if you have recently purchased like Page Industries, 15% fall, you will go crazy. Yaar, pata nahi kya ho gaya, right? Okay. So let me first and foremost explain that what has happened at Page Industries. I will give you my very quick viewpoint there, and then you can make a call whether it makes sense to buy these type of stocks or not. So, okay. So last year you would have heard that many companies have had input cost pressure. So what is the meaning of input cost pressure? That raw material prices have gone up, coal prices have gone up, steel prices have gone up, construction material prices have gone up. Similarly, what is the raw material for something like Page Industries? So they make like undergarments. उसमें कपड़ा जिससे बनता है cotton से, right? So cotton becomes one of the primary drivers of cost. So if you take a look at the cotton prices, last year it went from what levels? From approximately $7.7 US all the way to $2, right? So almost 3 times price rise in cotton, right? So that's one. So if you take a look at cotton prices after COVID, you will see that it was roughly at like 0.5, 0.6. And then it went all the way to 1.4, 1.5. So at least double to hui gayi, right? Within a 1 year, it almost doubled. So this is massive pressure in terms of cost. Now what has started to happen? Well, the prices have started to come down for cotton to its reasonable levels. That is the most important point. Now use your brain and think about the fact that if you are a company like Page Industries, will you manufacture more at a time when cotton prices are here, here or here? The short answer is no, that you are unlikely to do that. Why? Because your variable cost will go up. So your profits are anyways going to get crushed if you are manufacturing more and more, right? You will not be able to increase your product prices at such a massive scale at which the cotton prices are going up. So what Page Industry decided to do was that they just decided to wait. They said that, you know what, that let's say that in 2020, when the prices were reasonable, we manufactured like 1,000 units of our product. In 2021, we again manufactured 1,000 units, right? Our usual capacity. In 2022, because the cotton prices are more, so 500 ही करते हैं, right? So that is what they decided to do. 2023, if the cotton prices have come back down, they are again going to manufacture 1,000 units. What was happening was that this was leading to pent-up inventory. They did not create new inventory to begin with. Now, if they do not have new inventory to begin with, how are they going to execute that in terms of more sales? That's part A. Part B. The good thing that Page Industry did was that they did not say कि यार inventory पड़ी हुई है, we are going to sell it at a loss. No, they did not do that. That was a problem that consumer durable companies faced. For example, Whirlpool, if it manufactures a washing machine and if that is being kept with a retailer, that machine is losing value because electronic products can get damaged. On top of that, storage of a washing machine is fairly big. So kitni space aap ghir ke baithe ho rahe hoge, right? So all those problems are there with consumer durables, which was not necessarily there for a company like Page Industry. So Page Industry simply said, yaar hum maal banayenge nahi itna, right? So we are not going to manufacture that much to begin with. That will slow down the sales, right? That does not mean that they are cutting inventory at a loss. And that also, in a way, directly means that next year their manufacturing is going to go up. This is going to get reflected in numbers. So that is my understanding. Now, of course, you can have a separate viewpoint कि company बर्बाद हो गई, 15%, 20% उनका profit crush हो गया, whatever, 40-50% profit is gone down. So that company is gone forever. People are going to stop wearing underwears and whatnot. That is your viewpoint. So you please make a call. Now you'll say, ऐसा थोड़ी होता है कि if a company falls by like 15-20%, 15% in a day, it will come back up. This does not happen. Okay. So please check my commentary on Ujjivan Small Finance. Very interesting case study there, right? You can check my videos also. So I had purchased Ujjivan Small Finance somewhere here, like 25-26 rupees. And it kept on falling and it fell to almost 14 rupees. I started getting like so much hate, right? I mean, you have gone crazy, Ujjivan Small Finance, what kind of an, useless bank is that? Kuch nahi ho sakta, this, that. I was buying Ujjivan Small Finance in a falling market, right? Now it continued to fall. Did it reflect the fundamentals? No. Check the last 1 year performance of Ujjivan Small Finance, 110%. You can still go and check the troll comments, right? So I've stopped responding to them. Kitni kar loge aap respond. So I hope you get the picture that good things come back up in a stock market on individual stocks, especially if they are volatile. For example, Ujjivan Small Finance, they can easily fall by 5-10% in a day. Sometimes good companies are deliberately made to fall by 10-15% in a day. Good thing about Page Industry stock was that at least on Friday, when it fell by 15%, it quickly recovered, right? And the total loss on that particular day was around 8-9% for Page Industries. So that is the viewpoint. Again, not a push whether you should buy it or not buy it, your call. But I'm just helping you understand the commentary and absorb the commentary better. Now comes point number 3, that if you want to make money going forward in the market, at least for the next 1.5-2 years, then please understand that number 1, do not buy large cap that are overvalued. Number 2, buy large caps that are highly undervalued. Okay, so both these things I will relate it and explain it. See, what is likely going to happen from this point is, and this is the Nifty 50 chart, right? So this is one of the safest things that you can buy. Now we are here, right? We are almost at all-time high. So Nifty 50 overall is at an all-time high. When I had been purchasing Nifty 50 somewhere here, right here, then people were saying that, what, abhi aur girega market, this, that. Then people did not purchase it when the previous history of high was here, right? So people did not buy it. Now people are saying that, what, let us buy Nifty 50 here in bulk. It might be a good decision if what happens, that if there is a very clear breakout, so this is the breakout line, right? So 18,800 is the previous high for Nifty. If the Nifty breaks like this, it falls, it breaks, it again falls like this, and it will move like this, right? Or it could move like this. So this might be a great strategy that if you are doing bulk buying above 18,800 levels, because now you have a very clear indicator कि अच्छा Nifty 50 is in a very clear bull run, and 18,800 level has been decisively broken with volume. If you are doing bulk buying, then it makes sense to buy Nifty 50. Otherwise, what can happen? And let me clear it out and draw it again. Otherwise, what can happen is that, see, it will rise like this, it will fall, it will rise like this, it will fall. You are holding Nifty 50 only, no? So if you have purchased Nifty 50 here, then again, after 6 months, you have made like literally zero returns on Nifty 50. I hope you got this complicated point. Again, humble request that if you do like these type of tip strategies, do press the like button. It helps the video a lot. And I keep on giving more insightful macro commentary, whatever I'm doing in the market. I keep on outlining that quite in detail on member community. So do check it out. So see, this is the problem in terms of buying a good asset like Nifty 50 when the valuations are almost at its peak. But what you can do is that you can buy some heavyweights if they are good, but they are trading at a discount. So let me give you the example of Asian Paints right now. So you can see that it is trading at roughly 3,100. And even if it goes back to its previous peak, there is a good 16-17% gain, which is to be pocketed. Now, two things can happen. One is that we keep on hovering in the range 17,800 all the way to, let's say, 19,000, right? So if you buy Nifty 50 now, you're not going to make much return. You're going to make approximately 0% return. Second thing is that the Nifty 50 gives a massive breakout above 18,800 and we start trading in that range of roughly 21,000, right? So this is the range that we trade in. So from this, you are going to make returns on Nifty 50 also, right? Which you might be lucky if you buy it at high valuations and still get returns. And second thing is that these type of stocks, for example, Asian Paints, which are heavyweights and Nifty, they have to move in order for Nifty to go to 21,000. And even if Nifty keeps on dancing in this range, then also very high likelihood that Asian Paints is going to move up, might go down, move up and all that stuff. So you might get an opportunity to exit the stock in case you don't feel comfortable. Now, all this needs to be seen in correlation to the fundamentals. Recently, Asian Paints announced the result and these results were magnificent, right? So everyone agreed to the fact that, hey, you know what, Asian Paints is doing wonderfully well. So you can check this also. So just quickly go and check here and you will see that, you know what, highest ever sales, highest ever profits, even if you go quarter wise, right? Forget about everything else. Even if you go quarter wise, then also they are doing fine, right? March 2022 sales was how much? 7,893. Here it is 8,787. So the point is that the company is doing fabulously well. Inflation is cooling off. Input prices are coming down, very similar to that of Page Industries. So why is it that Asian Paints going forward is not going to go to its highest ever prices, right? In terms of stock, it might take a year. There might be panic that can be created, that whistleblowing ho gayi hai wo, right? So you can't do anything about it, but just use basic brain, right? And think about it. And if it makes sense, then build your portfolio intelligently. Learn how to pick stocks, learn how to aggregate and build your positions. So, okay, so let's quickly move on to point number 4, which is that in a bull market, and if you feel as per point 1, we are in a bull market, you must pick some high value bets, right? And which could be a little bit high risk, but let me speak about it. See, take a look at this graphic and this shows the returns that have been given by small cap index. And in a bull market, whenever, for example, bull market would be that in 2003, we had a bull market. Sensex Nifty se bhi aap replace kar sakte ho, that 91.5% return here, and small cap gave almost double the returns. Similarly, 2007, there was a bull run and here again, small cap outperformed. 2009, again bull run, small cap outperformed by a lot. 2012, bull run again outperformed. Here again outperformed. The point I'm trying to drive home is that small caps outperform Nifty 50, Sensex in a bull run. If you feel that we are in a bull run or we are close to a bull run or bull run has just started, then it might make a lot more sense to purchase some small cap exposure if you are okay with the risk. What is the easiest way to do it? Just simply go on any mutual fund, buy small cap 250, right? Don't buy small cap 100. And let me also show you very quickly on the technicals chart here. So let me show you first Nifty 50. So Nifty 50, you will see that it is almost at its all-time high. What about mid cap index? So you will see that mid cap has actually broken its 52 weeks high. So that has also given return. But what about small cap? So let us quickly go to small cap 100 and you will see that we are still trading 21% from its peak. Large caps have given a run up, mid caps have given a run up. If we are in a bull run, why is it that small cap is not going to give a run up when you have the entire previous history that small caps outperform mid caps and large caps in a bull run? So from that perspective, I think it makes a lot more sense to have small caps You can take individual positions also, but for that you need to have courage. If you don't have courage, then please do not invest. For example, some small cap, mid cap companies like Aavas Financiers, they have fallen by 50%. Something like Tarsons has fallen, Grindwell Norton has fallen. So all these are good stocks. Kaya has fallen. So all these stocks, according to me, are good. Again, not an investment advice. Please check with your investment advisors and please do your own due diligence. I give detailed commentary. Please understand, right? I mean, whenever you are buying any individual stock, please understand why it is falling, what type of arguments can be made for against it. Amrit Anjan, people are getting scared. You know what? 25% fall ho gaya, 30% fall ho gaya. Bhai, pura Nifty small cap has fallen by how much, right? So if you check this, there is a gap of approximately how much? 21%. Now, if Amrit Anjan fell by 25%, right, and relative benchmark, which is Nifty small cap, is falling by 20%, so aisa koi pralay aa gayi, right? The answer is no. It is not as if that, something bad has happened. But if you do not have the heart, then please do not get into it. My simple suggestion is that please pick assets that you are comfortable picking. Put some element of risk because this is where money is made. Because this part of your portfolio, the small cap one, this is likely to grow at 50-60%. Your large cap, if you're picking intelligently, those will grow at 15-20%, right? Asian Paints mein aisa nahi hoga that you're going to make like 100% return over the next 2 years. Very good chance that you might make 30-40% return on it. So point number 5 is that it's very important to rotate your funds. Now, what is the meaning of rotation in funds? It simply means that, see, some industries are jacked up in a certain type of market, then they are brought down. So it's important to understand where growth is unlikely to happen, right? I'm not saying 100% nahi hogi, but very unlikely that growth is going to come or any massive return is going to be made. So for example, according to me, those are commodity stocks. Commodities stock do really well in a high inflation environment. They do really well when there is some kind of trouble going on, and they have a very long cycle. So if you are into metals, if you are into coal, if you are into infrastructure building firms, you are going to struggle, right? So my simple suggestion is that move away from infrastructure and all this stuff. Rotate your money to something like finance. If you are a long-term investor, 2-3 years, you are going to make good money. Rotate your overall capital into manufacturing, right? So that is still better, right? Compared to something like infrastructure development. Check consumer durables, right? So consumer durables are still trading at 30-35% discount from their peak. Why? I gave you the reason when I explained you the page industry story. So from that perspective, if you apply that same logic, ki bhai, Whirlpool ko machine hold karni thi, right? They had to sell their inventory at a loss. Last 12-18 months result would be bad. In fact, maybe this quarter might also be bad. But go and check, right? Literally go and check the price of a microwave right now. Fridge, TV, AC, all has gone up like crazy, right? I'm not kidding, right? You tell me 3 years, 4 years back, if you were buying a microwave, how much that used to cost and how much is a microwave costing now? Microwave I'm picking up because that is a product that is very easy to track, so to say. So aap khud karke dekh lo, right? And then you tell me that after 6-12 months, what is going to happen to these companies? Are they going to come back up? Short answer according to me is a definite yes. So now comes the final point, that please cut uncertain sectors. Now, I have deliberately said time and time again that I am not a big believer in India IT story. TCS was the only stock that I had bought because I was getting it at cheap, right? Approximately 3,000. I sold it at 3,300, something like this. I exited the stock completely, rotated that entire money when Nifty IT was trading at a massive discount, 30-35 oddish % discount. I have rotated that money into that. All this information I have presented on member community. Those posts are still there. So from that perspective, right now my only position in IT industry is in Nifty IT. That's it, nothing else. I am highly uncertain about the IT industry. Why? Because I'm not here to tell you like pointless stories, right? The IT industry mein ye ho jayega, wo ho jayega. I don't know what is going to happen with IT industry. I don't know if TCS will be able to come out of evolving in the cloud space onto more AI based stuff. Whether Wipro will do it, Infosys will do it, TCS will do it. Just because TCS has done well over the last 20 years does not make any sense why it will be able to jump on that new tech bandwagon, which is being centered around cloud and AI and is going to do exceptionally well. I don't think so. There is a very high likelihood that AI or certain tools in AI might be built that might automate a lot of software development, software replication. So something like TCS is going to suffer. Is this change going to happen immediately? I don't think so. That this will take time to pan out. Commercial applications will be built. So this will take time. So meanwhile, I just want to swing IT. I will sell it off. When exactly I will cut my positions, I will inform. But my viewpoint on IT is very simple, that it is a highly uncertain space right now. It is going through a lot of innovation, so to say. It will have to revamp its business model. Some new companies altogether might replace TCS. I'm not too bullish on that. The only reason why I had built my position on Nifty IT collectively is that I was getting it at a super inexpensive price. So go back to my two previous rules, that retail investors will make money if they're buying stuff for cheap. Second, they are going to make money if they stick with the bull run. So almost all my money is now invested in the stock market. I have to build a little bit more positions, which I will keep on building, but mostly I'm invested. I'm going to stay put in the bull run in majorly discounted stocks. That's the intent with which I will be navigating the market. In a market, you will always get good opportunities to buy. And in any type of market, you can buy really bad assets for which you will continue to pay for years. So don't make that mistake. I hope you found value in this video. If you did, do press the like button and I will see you soon.